Today we want to talk about amended tax returns as far as they're concerned with mortgage loans. The reasons why people may amend their tax returns are many, but most of the time it's used to adding additional income or correcting income. You may have had multiple jobs and missed a W-2 or something, or you had self-employment income that you didn't file that you should have filed, or maybe you missed deductions you had or credits or anything like that. Fixing errors on the original tax return is the basic definition of it. The issue is that you can amend your tax returns, but lenders don't necessarily have to take them. How lenders look at amended tax returns are that if you do owe, we are going to want to know that you started a payment plan and have started, and you have an official payment plan, not just on your own, that you have an official payment plan accepted by the IRS. If you do have a payment plan, we will add that payment plan to your debt to income ratio. They'll also want to know why your tax return was amended. Did you just amend your tax return so that you get this mortgage loan? Has your amended tax return been processed by the IRS? And whether the changes of your income, impact you qualifying. So maybe you amended your tax returns, you gave us tax returns, you're building a home, and now that you amended your tax returns, you don't qualify anymore. Did you amend your tax returns to qualify? Those are some things that the underwriter will look at. Usually you do have to wait a certain amount of time before a lender will accept amended tax returns. Some will require 3 months, some will require 4 months. They may want to see 3 months of the IRS payment plan if you're on a payment plan. So those are things you want to think about. FHA rules for amended tax returns. The FHA again requires that the tax returns have been processed by the IRS. We need official IRS transcripts to use your amended tax returns. And we can't use amended tax returns for pre-qualification unless verified by the IRS. So you can send in your amended tax returns, but unless we have those transcripts and they've been verified by the IRS, it's really not going to do anything for you. Amending your tax returns can delay your loan closing. So those are some things that you want to worry about. Not worry, but be concerned about. Filing amended tax return during the loan process could cause at least an 8 to 12 week delay, depending on the IRS, depending on your accountant, that you file it electronically, that you walk it in or whatever. So those are things you really want to think about. It's going to maybe it will cause additional scrutiny from underwritings. They're going to wonder, like, why did you amend your tax returns? Why did you amend them right before you got on the loan application and everything? So we're just going to be honest, that will cause additional scrutiny. Possible changes to your loan approval status. It may change your loan approval status. It may delay it, the time that you can close. It could possibly help it if it is viable, the reasons why you amended your tax returns. If you want to talk about amending your tax returns and you're in the process of getting a loan or you're months from it, you may want to talk to a loan officer up front. Be prepared to provide full documentation, and you will also need your original return. We will need the original return to see, what the changes were. Other things are amended tax returns. It's going to be the Form 1040X. Get your updated tax transcripts. That'll help speed up the process. If you've already filed an amended tax return, it's very important to let us know that the tax return that you sent us is not the one that's going to be used. So make sure that you do that. If you have questions about amended tax returns, how they affect your mortgage approval, reach out to us or your lender. We look forward to working with you and hope this helps out. Have a great day. Bye.